well. So is there still a reason to get into this stock if you're not already?
Yeah, so you don't always want to be buying companies that are down, because sometimes they're down for reasons, and even though Facebook, we think it's a different situation. In the case of Cisco, the company has gone up over 20% year to date, and that's really because of a couple things. Number one, the company has been able to grow faster than its peers. So they're looking at accelerating revenue growth and accelerating earnings growth. Additionally, they are using that cash from their business and giving it back to shareholders.
Yeah, like a dividend.
Yeah, their payout now is pretty close to 50%. So you're looking at a company who's executing very well relative to the peer group, giving the money back to shareholders, and then it's actually very inexpensively priced. Even after this move, it's trading at 11 times forward earnings, which is very inexpensive relative to the market.
All right, a different stock also you're long on, Michael Kors.
Yeah.
I always find some of these names interesting because I feel like they can be, investors and consumers can be fickle.
Yes.
So how is this a long-term play?
Okay, so the good news is you're not paying for the potential fickleness of investors or buyers. So in the case of Michael Kors, a company that's actually pretty young in its maturity curve. If you think about maturity cycles for companies where they go from low growth, accelerating growth, and mature growth, this is a company still very much in acceleration mode as they roll out new stores globally. So they just most recently raised the number of stores that are addressable to them globally, both in Europe and Japan, as well as China down the road. And even the United States, they still have lots of unit growth store potential ahead of them. They're still comping at a very high rate, but yet it's not priced that way. We've had a rapid acceleration in earnings and massive earnings revisions, and yet the stock is only up about 18% year to date. So some people would say, wow, it's up a lot. Well, no, it's really not up a lot considering the earnings revisions that we've had. It's now trading at a price that's less than other high growth peers like Under Armour, like Lululemon, for example, both of which are trading at 10 multiple points higher despite the lower growth rates that we see for those companies. So we like Michael Kors a great deal.
All right, you also have a short side of your strategy. What are you short? What just doesn't look interesting to you at all?
Well, I can't give you individual names,
Yeah.
but thematically we're going into second quarter earnings, which I think are going to be overall on the lighter side. And they're going to be lighter in the sense that firms that were relying on China to re-accelerate their growth are not seeing it yet. So a lot of multinational industrials, basic material firms, we think are going to really struggle to hit numbers, and we'll probably have to lower the forward bar. So we're finding some good short ideas in some of those spaces.